Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to go over a bunch of charts here and I'm going to give you my analysis and hopefully you can get some trade ideas to better your own trading. But first, if you're not already a member, go ahead and visit the homepage www.thetradinganalyst.com and you can see all of the member-only benefits, text message alerts, email alerts, daily watch lists, daily member videos, and educational materials from yours truly. You can also scroll down and see all of the features here, our testimonials as well. And if you scroll down to the bottom, you can go ahead and sign up for whichever member option suits your personality best. It's a great opportunity. We'd love to have you. Alright, so let's get into the charts here. First, I wanted to take a look at the S&P 500. So this is the daily chart. And you can see here that we made an important break at the end of last week. We broke over all these previous highs. You can see that we're clearly over these highs. Now I'm going to go to the weekly chart so you can see it a little bit more clearly here. You can see that we've got rejected up here near about 212, again near 212, 214, 212, 214, again over here 212, 214, and then you can see this weekly candle, last week's weekly candle closed well above this resistance right here. So definitely looks to be like the S&P 500 is heading higher. We broke out of a 2-year consolidation range. You can see that we just kind of traded sideways in here between this range, and then we're finally breaking out of that range like no one expected us to. Whether or not we're in the 7th year of a bull market, it doesn't matter. So bull markets can last 20 years, they can last 30 years. There's no time limit to how long any of these markets can last, whether they're bull markets or bear markets. There are averages that you can go by, but those are just averages, okay? So there can be outliers as well. So just like we're going to see right here, the average bull market is really about 6.5 years or so. It looks to me like we're going to be well outside of that average because the break over this trend line right here, over this resistance here, is not to be ignored. This is a big deal, especially because we were trading sideways. So earnings projections, rate hikes, none of that really matters. So unless there's a nuclear war, something like that, I don't know. I'm just making stuff up at this point. But really, the chart speaks for itself, and we broke over this key resistance, and that's all that really matters. As a technician, price is the only thing that should matter. So definitely looks like the S&P 500 is going to be heading higher. Now let's get into some specifics here. Now that I've talked your ear off on that, we've got some support down here, specifically at this last high over here, about 212.50. A little bit of support in the 213 to 214 range from up here. I would not be surprised to see it kind of dip down into the 210 range. I'm not saying that's where it is going. I'm just saying that I'm not gonna start panicking if we dip to 210. So in my opinion, if we do dip down to 210 or so, that's going to be a buying opportunity. And anywhere between 212 and 210 is definitely a buying opportunity. At least that's the way that I'm seeing it. Alright guys, thank you for stopping by. Appreciate it as always. Again, if you're not already a member, go ahead and sign up here for the monthly membership or the lifetime membership, whichever one suits your needs. We'd love to have you.